Okay. Thank you, Nicholas. We'll try to make this lively, and I think it's an interesting group because everybody here has a little bit different perspective, and so hopefully some of those different perspectives will come out with differing opinions, and not everybody will be on the same page. That always makes it a little bit more exciting. And you guys can correct me if I'm wrong, but Anil, on my right, you guys focus more on older tonnage and recycling. Marco's in the product tanker side of the business. Bob's primarily in the crude tanker side, but I think he can be agnostic. And Andrew runs pools and does all sorts of things, right? Am I generally on course so far?
Yeah.
Okay, good. So, on the outset, just so that we know where everybody's coming from, just with a quick, maybe one-word answer, with respect to tankers in the next year or however long, are you optimistic or pessimistic relative to where we sit today? And that will sort of guide how we can think of your answers to subsequent questions. We'll start on the end, Andrew.
I can say optimistic.
Optimistic. Okay, good.
I'm saying the market's going to turn American Thanksgiving Day, 3 p.m.
All right.
After I finish my dinner.
Yeah. Little vague, but something to work with, I guess. Marco?
Remember it if I'm right.
I'm for sure I'm optimistic, but last time you told me 4 p.m.
Look it up, Marco.
That can't be right. You're always pushing back the time frames, not moving them forward.
I'm optimistic, and these guys are optimistic because I'm going to scrap their tonnage. There's going to be a demand for vessels.
It's a win-win.
Good.
That's a big difference. Pakistan's open, as you know.
Yeah.
All right. Well, so everybody's optimistic. I suppose it's easy to be optimistic after the last few months, particularly in the crude tanker market. But to that end, I think when looking through the various aspects of the business, what makes you, and we'll go down the line, what makes you the most optimistic? Is it just the counter-cyclicality of in the nature of shipping? It's always best to invest when there's blood in the street, or is there something more tangible and fundamental to your degree of optimism? And whoever wants to answer that is fine with me.
Shall I go first?
Sure.
I think from my side, I see two elements here at play. I see finally an inflection in the supply-demand situation, which we're probably seeing a little bit more visibly on the product side than we are crude, but that is also following. But I think more importantly, and any poor soul who's spent the last few days with me, including my wife and family, all I talk about is scrubbers. And I think the 2020 regulations that are hitting the industry are going to be the most significant factor to impact shipping, possibly since Open 90, certainly much more important than ballast water treatment plants. This is an absolute date, 1st of January 2020. This is no slow transition, no slow migration, and we're just sort of 18, 20 months away before that date. My sense is people have some strong positions, but only about 10-20% of people have strong positions on this, for or against. 80% of the shipping owning market seems to have no position at all, other than to bury their head in the sand and say, well, we'll wait and see, or it's a charter's problem. So for me, I can see a phenomenal opportunity around that for those that are thinking with 2020 vision about what's coming around the corner.
Okay. Now, we'll get back to that in a second because I have an opinion. Well, I have a conspiracy theory on that. But is there, aside from maybe the 2020 regulations, what leaves, or for anybody who would want to comment, is there anything else that leads you to be optimistic other than just sort of the natural hopefulness of all ship owners?
Yeah, well, we're hopeless, and we have to be optimistic. But, I mean, there's been a lot against us the past few years, is backwardation, which slows everything down. The lack of contango isn't just a lack of financial plays. It's the ships go slower when there's contango. They discharge slower. The weather was great this winter, which is never good because everything moves slowly. There was way too much storage, which we all know OPEC is unwinding. So there's been a lot of headwinds, and sooner or later that will right itself. the scrapping is really starting to kick in. I think what drives the scrapping is the volatility of scrapping, not the absolute dollars. If you own V's or Suez's, to see over $400 a ton, you don't know how long that's going to last. And so if you have older ships, you play in two volatile markets. You play in the freight market and the scrap market. Even though the freight market's down, you have optionality in that market. You also have optionality in the scrap market. And on the big ships, that's a big component of your ultimate return. So I think as ships hit their last intermediate, they'll start to scrap. We saw 20 V's sent already this year to the breakers or to the cash buyers, right? And Pakistan, which was closed to tankers, I believe has just opened, but I'm sure we'll hear more about that later.
Yeah. Why am I optimistic? For several reasons. First of all, because I think that all the fundamentals are in place, so especially for products. Inventory has been coming down. You have incredible numbers of depletion of inventory in the United States especially. The big flow of ships coming in the market has stopped. Shipyards are kind of full until 2020, 21, so they won't be able to change these statistics. And world economy seems to be going back to normality, so you have growth. So I think that all the fundamentals are in place. Naturally, all of these fundamentals have been in place also for a while, and I must say I was wrong, thinking that this positive market would be coming sooner. But I think it's not a question of when will come a strong market. I think a strong market is inevitable. It's just a matter of deciding when. The second 6 months of second part of the year of 18, beginning of 19. So it's just a matter of the date. But I think it's kind of inevitable, especially for the products, that we're going to have a strong market.
Let me speak from a helicopter view kind of the situation. Because I'm at the tail end of the scrapping. Having been in this business for about 20 years or more, I've seen the cyclical nature of various industries. In 2012 was a big year for dry bulk and then containers, and we scrapped like crazy Capes and Panamax containers, and slowly the market starts balancing it out. So when we talk about optimism, we're talking about crude and the products. I'm talking from the crude angle. So right now there is, like you said, blood on the street, a lot of pain. And Chaco said earlier, Nick Chaco said about, we would like to make at least some money. We are making no money. We have already scrapped, like Bob said, more than 20 VLCCs. I would say about 10 Suezmax, about 20 Aframaxes. So that's a very aggressive pace of scrapping. Almost 50 vessels so far this year have been scrapped. And so you have a lag once you start scrapping aggressively, albeit it can be a 1 year, 2 year, 3 year lag. Bob wants post Thanksgiving. Good luck to him, but I think he's going to catch up just the level of scrapping. I think some of the owners were holding back their vessels simply because, as he said, Pakistan was closed, and as it opens, so we expect to scrap close to 30, 40 VLCCs this year. So I think that's a big number.
Okay. So now let's circle back around to a topic that has been hit on repeatedly today and that Andrew, you brought up, the impact of the IMO sulfur regulations. Obviously, you already said, Andrew, and we're going to take another poll here. You already said that you think it's going to have a major impact on the market. Just yes or no, do the rest of you guys anticipate this is going to be a major event for the market? Bob?
It will be. I think it'll have a lot of positive effect.
Okay. Marco?
I think we'll have a lot of positive effects, like Bob. I'm not sure where is the fallout of all of this. Is going to be more positive effect because there's going to be new trade routes for distributing low sulfur fuel, but I think it's going to have a positive effect. Everything is based on a delta between 0.5 and heavy sulfur. So I think that is really very early stage to understand how that will be developing. For sure, 20 and 21, there's going to be a positive effect after. I think it's kind of very difficult for anybody to guess what's going to happen.
I'm going to put a little different spin on this again. I think the scrap market will play a big role in this regulation because if right now VLCCs are about 17 million, if you have to invest 2 million in scrubbers and maybe a ballast water treatment facility, maybe a owner has to see, I'm better off scrapping this and getting a more modern vessel. So, but if the scrap price goes down to 10 million, maybe it makes sense.
So, so to that end, everybody believes that on the panel here that it's going to have a major positive impact. What are you doing about it? You guys putting your scrubbers on? I mean, if it's going to be a big deal.
We're not in the business of betting on the differential between different types of oil. We're in the business of moving oil. So people say, your head's in the sand, but if nobody gets scrubbers and everyone suffers the same increase in price of fuel, then we're all in the same boat. And we suffered a double in the price of bunkers before, and we'll suffer it again. The older ships will suffer more, of course. But I think the positive effect is going to be the disruption in transportation, the disruption in systems. The residual fuel that's made in some parts of the world can't be refined. It has to move somewhere. It has to be stored somewhere. So generally, any major disruption in supply lines is good for shipping because the system's less efficient. It takes more ships to move the oil. So I think we're waiting.
I agree with Bob about the distribution. We have still 4 ships to be delivered, 4 LR1s. We installed a scrubber on one of them to see how it goes. The other 3 would be difficult because they're very close to delivery. I think that if you have to build ships today, it probably would be common sense to have them scrubber fitted. To retrofit scrubbers, I think that's kind of a more complicated issue. So I think there is wait and see. But I think there's going to be a big impact in the chaos that's going to come in the distribution lines. That's going to be the benefit out of the whole thing.
So let me interject my conspiracy theory here. I agree in general with you, Bob, that if everybody's in the same boat, well, fine. And frankly, if the cost of fuel goes way up, then it makes some economic sense to slow your ships down to the extent that you can, which tightens the market. And so everybody here should wink, wink, nod, nod, not put scrubbers on their ships because that is a leverage that you can have over your customers that ultimately could cause the market to tighten pretty substantially. Although, by the same token, if I really believe that, I would say I wasn't going to install scrubbers and then turn around when nobody was looking and actually do that and hope that nobody else would follow that path. You think there's a possibility that this could translate into a really good tanker market as a function of slow steaming? I don't know. What do you think, Andrew? Is that a possibility?
I think it's quite slow to speak one story and do something different because the order book for scrubbers is fairly transparent. It's certainly known that we've put our flag in the ground and committed to both putting scrubbers on our new building fleet as well as retrofitting existing ships that we have. I think to Bob's earlier comment, I think we're not all in it together. From our point of view, if we have an opportunity to buy fuel at what today at a very low differential is $250 cheaper, I would rather turn left at the gas station and go and take that low-cost fuel rather than paying the higher fuel, because when it comes to the market, predominantly tankers you're paid in world-scale terms, we will be the ones getting the better sort of net contribution from being fixed. But I think the differential, as what Mackenzie is hinting, is towards like the $360 per ton. That is a significant increase in your bunker price, and nobody enjoyed bunker prices when they shot up to 600 and 650 tons. Was it some 10 years ago? It significantly impacted the performance of all the tanker companies. So I think surely, if you expect that differential is going to be higher, you cannot just say, well, I'll just take gas and I'll slow a bit slower and just face the trouble with everybody else. We don't want to go and face the trouble with everybody else. Owners are always act like sheep and follow each other. We actually want to be different, and we actually want to survive going through into 2020 and beyond.
The best way to do that is if nobody follows you, right?
That would be even better.
It all depends on the differential and how long it takes to oil companies to catch up, or how much oil is available. And it's an economic decision. It depends upon the age of the fleet. If you have new builds, that's one decision. If you have older ships, that's a different decision. There's an increase in operating costs. It's just a matter of how old the ship is, what your balance sheet looks like, what you believe the differential will be, and what you think the rest of the market's going to be.
I think that I saw some numbers. There is over 90,000 ships in the world trading. And probably by 2020 there'll be a few thousand also with the best intentions scrubber fitted. So what is everybody else on the 88,000 going to be doing plus? So it's a kind of a big decision that you cannot change today. And then it's very complicated also because you have big storage problems. How you're going to store the heavy fuel, the 0.5, you can't commingle them, so this has to be a dramatic increase in storage capacity in every port. So I think everybody has a certain story. For example, container ships have pre-planned routes. I think they are very good candidates for this. Ships that tramp, I think it's more complicated as an issue. So I think it's really, everybody has his own story, but I think that at the end, the chaos that's going to be ensuing, the distribution that's going to be disrupted, that's going to be the big benefit out of all of this.
Chaos, that's a lot of fun. So what, as we look, as each of you guys look, put get your crystal balls out, right? I'm asked to do it all the time, so I'll turn the tables a bit. And you say, okay, we've heard a lot already today of all of the technological changes and other things that are going on. 5 or 10 years from now, how is the tanker market in particular going to look different than it does? Or not? Do you think there's going to be more consolidation? Do you think the public companies are going to play a bigger role? Do you think there'll be, I don't know, any big changes? Smaller role of charters? Or of brokers? What's the world coming to?
I think that the question that you ask is a very existential question, because in shipping you try to make today a decision that you have to look forward for 15-20 years if you have a new build or something like that. And I think today it is more and more difficult to make these kind of decisions. Just speaking strictly about the product market, I think the market in the future is going to be more consolidated. Public companies are going to play a bigger role. There's going to be always smaller owners, but they're going to play a much smaller role in the whole. You can start seeing it now. There is a big disruption in the chain of the ships. We bring them to 15 years, and second-tier owners who buy them back from us after 15, 16, 17 years, due to the lack of financing or restrictions, smaller owners are totally absent from the market. So it makes it our pipeline in this respect has been interrupted. So I think there is going to be big changes. I think that the products are going to play. I don't believe that there's going to be a world without carbon fuels absent completely. There are certain ones that are totally you can't substitute them. Jet fuel, how you can't run planes on electric. So there are certain things that will be. So probably it's going to be a very mature market where you grow by consolidation, smaller margins, and there's going to be 2-3 very big players who are dominating the market. Probably there'll be something like that.
Yeah, I agree with Marco. The world consumes 100 million barrels of oil a day, and we're not going to change fundamentally how the oil moves, and we're not going to get away from carbon very quickly. Peak coal, which we've been trying to get rid of for 100 years, peak coal was 3 years ago. It continued to increase for the past 100 years, just at a slower pace. But it's going to be the same with oil, I think. We increase our oil consumption about 1.5, 1.6 million barrels a day, year in and year out. That's a tremendous amount of energy. And no matter what we change to, it'll have an effect on the planet. I mean, people say, well, we should have more windmills, or we should have more solar panels, and we should. But if you took all of our energy from solar panels in the U.S. to fuel the cars, it would take up every piece of real estate in the U.S. and would have an effect. So, the fact is we use a lot of energy. And when you use a lot of energy, it's going to have an effect on the planet, whether it's fuel, whether it's carbon, whether it's windmills. If you have windmills, what about the birds? What about the shade? What about the wop-wop? What about the bees? Everyone's scared about the bees. It'll have an effect on the planet, and it's going to come in slowly, and it's expensive. So the most efficient way to move huge amounts of energy around the world and to store it is with oil. And I just can't see how in the short run it's going to go away. I mean, maybe I'm naive, but as I said, peak coal was 3 years ago. And tankers are sort of fundamental. They're big boxes that carry oil. There'll be more regulations, and there'll be some consolidation because the regulations will insist that big companies operate the vessels. But I think fundamentally, the change will be around the edges.
I think to go beyond the birds and the bees, I think probably one of the big changes in maybe it's actually, frankly, it's already now. I think the impact of OPEC and the obsession with OPEC and what they're doing will become less prevalent as the states will become an increasingly important exporter. I think something that's happening now with the prevalence of the Chinese leasing companies and really where the beneficial ownership of shipping is moving, I think we already have some very large Chinese PRC-based owners today. I think we'll have some very, very sizable Chinese institutions on a forward basis, which may not be as consolidated as we are today. Having just had the last drink session sponsored by the SGX, it would be nice to see one day some major shipping companies listed in Singapore. I think NOL was one of the last ones to leave here, rather than the dependence on sort of Norwegian and US predominantly based locations. So I think going forward, in addition to the comments of my colleagues, I think there are two factors that may prevail.
Anil, any changes coming in the scrapping business, or that's just what you see is what you get?
No, I think the scrapping is a highly misunderstood business. I think the awareness is coming in gradually about the various types. What's affecting is the regulation, especially the EU regulation, which is really silly regulation to put it bluntly. Very hard to comply if you're a EU-based owner. Especially if it's an EU flag vessel, that's even worse. If it's non-EU flag, you can't be scrapping a vessel from an EU port. So these are all restrictions that affect significantly the value of an asset, if you are operating in those areas. So that could be a two-tier market. The good thing is the recycling part of it is turning green more and more. In India, I think at least 60 yards today are green, which is more than 55% of the yards that are operational, which is great. So you have, because China as a recycling nation is pretty much ending. So you have Turkey and India. So fortunately, Bangladesh and Pakistan are gradually, Pakistan as Bob said, was shut down for about a year and a half. They just came up with a new guidelines for recycling tankers, which they just came up today. The NOC was issued, no objection certificate. So that kind of regulation which is happening domestic is good. It's good for the industry. And what we are seeing is the experience curve kicking in. So when we first started this green recycling, an owner had to take a discount of close to 15% on the value of an asset. Today that discount is about 3%. So all these things are good. I mean, it's just we don't have enough capacity to recycle things responsibly. So what doesn't help is when constantly the platform attacks the industry and owners feel intimidated, going to an Indian subcontinent yard. That's not good, because then what else are you going to do? But otherwise, I think it's going for the good. And as I said, as long as our job as traders is to ensure that there is a value for an asset. Because as I said earlier, if a $17 million asset suddenly becomes, to exaggerate, a $5 million asset, suddenly the whole play is different. It's different for the charters, it's different for the bankers, for owners. The business changes. But I think people have always stayed away from the recycling market. It's one of those dirty little things. I'm very proud of it. I mean, I think it's a great industry to be in. It's a very green industry. It's an environmentally responsible industry, but I think those messages don't go out. If anybody, I always tell the owners, come and visit the yards. I tell people, come and visit the yards and see it for yourself.
Good.
Anil, what's the capacity of Pakistan for tankers compared to India?
What is the capacity of?
Pakistan for tankers compared to capacity for India?
I mean, Pakistan is much smaller. There are about 30 yards. The question is, again, what kind of tankers we are talking about? VLCCs, again, these are expensive items, so you also need yards that have the capacity to buy. You have a letter of credit for 17 million, 18 million. So that would be about 10. So we talk about quite limited capacity.
Is that, just to follow up, with Pakistan back online, should that be a tailwind for scrapping prices, do you think?
Not really, because there's already a lot of unsold inventory. There are about, I think, 9 VLCCs that are still unsold that traders like us took delivery of earlier, anticipating Pakistan to open. So we've been anticipating this for about 2 months now. It finally happened. So I think it's going to take at least if prices will improve, this is going to be in Q4 of this year.
Okay. So we'll hit a couple of tanker fundamental sort of strategic questions. Andrew, we'll start with you because you guys over at Navigate have and do crude and product. Product tanker owners, and I think maybe Marco would be in this camp, have said that they think it's possible for the product market to decouple and improve even if the crude tanker market doesn't. Whereas crude tanker owners, and I'm not sure if Bob would be in this camp, but have tended to say, won't happen, right? They're inexorably linked. You kind of do a little of each. What do you think? Inexorably linked or possibly separate?
For once, can I give a mediocre answer and say relatively linked? I think fundamentally you can't break the link from crude, VL, series, Afras, LR2, swing, clean, dirty, LRs, clean, dirty, LR1, LR2, down to to the handle, down to the MRs. So in that sense, you can't de-link. But what I think is maybe changing is often we talk of recovery as being crude-led recovery. And I think what we will see this time, despite perhaps the recovery being triggered by supply rather than demand, is that the recovery will be precipitated by a product recovery. It's actually instigated primarily by product demand rather than crude demand. So in that sense, it's not decoupled, but definitely I'd say that the product is pulling the crude at the moment. But I think probably by then crude will quickly follow. There's no broken link there.
Interesting. Either of you guys have any thoughts there?
I think I would tend to agree because I think the biggest volatility you see it in the products is on the bigger ships, the LR2s and especially the LR1s, which are ships that feel the impact of trading clean or dirty. I think that for sure, if you start having a stronger crude market, a lot of these ships will be going back inside the crude, remain dirty, and they will not be poaching on the products. So I think relatively linked, but I think also I'm very optimistic that demand could be triggered by the products, because at the end of the day, we're going to have a couple of years at 2-3% growth of tonnage, when there is growth of market constantly. It's been an average of 4.5% for the last 20 years. So so something has to give.
Yeah, I think if you look at the 20 years, if you look at a 20 or 30-year cycle, they look to be the same. But when you get down inside the individual trades and individual years, they can be very different, right?
Yeah, that's fine.
Okay, so I'll try to leave a time for a question or two, and make this my last one. So if some friendly capital provider were to meet up with you afterwards at drinks and say, I have $100 million, I need you to invest it in the next month, what would you buy? And we'll go down the line. And you guys take careful notes because you can meet them afterwards with drinks to give them your money. So, Anil?
With me? Just let's keep on buying some VLCCs and store them. 100 million can go very quickly. 6 VLs and I'm done.
Okay.
I think that we need new building orders as much as we need a hole in our head in our market. For sure, there's a lot of very attractive tonnage back in the eco ships. I think it's a great moment to buy. There is a point of flex, and these are great ships. And the eco story is back with violence, because if there is this increase in fuel, the eco concept is coming back with a swing. So it was out of favor before because then oil came off. Now it's going back up. I think there's a lot of second-hand ships to be bought, and it's going to be a very good investment.
It's simple. I'd team up with Anil, and I would build a new recycling yard in India and buy as many tankers as I could and scrap them.
And then you're competing with him.
No, we team up. We team up.
I think we're excited by all sectors at different times. I have the pleasure of also looking after Navigate's offshore interests as well, and that's perhaps a little bit more difficult to raise cash than other sectors now, but if there's any time to buy one particular asset type, it may well be offshore, so I might put it out of the tanker pool and put it into offshore.
All right. Good answers all. Well, we have a few minutes. If there are any questions for our panel. If not, I'll make something up. Uh-oh.
Mark, you wanted a question.
Well,
You're a nagging.
Nicholas, did you have a question?
Please, Nick.
No. All right. Well, then, in which case, what, if any, I would say there's been a lot made of the development of the potential for U.S. crude to, say, come to China or come to Asia, and that might, as you said earlier, might offset the impact of OPEC cuts and sort of change the world from a swing producer standpoint. I think that's something that a lot of people have talked about. Away from that, are there any other interesting dynamics or developments that you guys are seeing in terms of the movements of either crude or refined products that you think have the potential to really be the next big story?
Well, we see a lot of products moving out of the Gulf going to South America. South America is a very interesting case because for the crisis that's happened, for in general all their capex on new building refineries has been slowed down dramatically. And now you are starting to see a recovery. There is a huge flow of products going from the Gulf of the US to Brazil, Chile, and then you have countries like, we have a joint venture with Flopec, who are the Ecuadorians, the oil company. They don't have a refinery in Ecuador. They have decided that they extract oil, export it to refineries in the US or other places, and then they import back the product. So when you have these kinds of dynamics, you cannot be but optimistic on the market.
I just think we underestimate the amount of oil that's going to come out of the States.
I do too, by the way.
There are, we're mostly owned by Riverstone, which is all energy. And the dynamics of the oil business in the U.S. is different than anywhere else. There are thousands and thousands of small companies that each have a different price point that can move very, very quickly and can react to a change in prices of oil, unlike a national, unlike a major. You know, each project is small. As the prices go up $1.50, another project becomes viable, another project for 1,000 barrels, 1,500 barrels. The producers are financially astute. They lock in futures so they can lock in their profits. So as soon as the price goes up, even if it's only for a little bit, they lock in the futures and they produce the oil. The American pipeline system is changing very, very quickly to an export system to bring the oil out from the interior. The ports are changing quicker than you would think to enable larger ships to come in and take the oil. It's a huge thing in the U.S. It's really helped the labor situation. It's helped some of the states like the Dakotas. The unemployment is almost zero.
I agree with you.
I listened to one guy who was another Riverstone company talk about when the oil was at $100 a barrel. He said, I couldn't find a sober truck driver for $125,000 a year. He couldn't buy a hamburger for less than $30. And then 6 months later, a truck driver was $50,000 and a hamburger was $5.99. That's how fast the prices move, you know, in the labor supply and the rest of the supplies in the industry. So we can adjust very quickly.
I agree with you. I was talking before the shale explosion in the United States, before the huge pickup, and I was talking with the head of shipping of a big refinery, one of the biggest in the United States, and we're talking about more or less what I say. You wouldn't believe it, but last year I spent most of my time buying railroad cars. So you know that's how the dynamic of this business is moving. Very, very incredibly.
And the technology has increased threefold. They say they can drill 3 times further horizontally than they used to be able to. The pressure is 3 times much. There's a shortage of sand in the U.S. to push through the system, to push the oil out of the ground. But what I think will surprise us the most is what we're not thinking about today.
Bob, let me ask you a question on the previous thing. If I was to buy 10 VLs from the market today, what would that do the freight rates?
You know, today nothing. Yeah, today nothing. I think we need like 20 or 30, but 20 have left the market, and it hasn't moved. I would have thought 20 would have done it.
It's 20.
Are the 20 out of the market, or the 20 sitting somewhere, an anchor?
Yeah, out of the market.
Yeah.
I think just back to the trade flows, the US story is well known and totally buy that. I think probably region in this area, I think the advent of the independent refineries in China, which by and large are bigger independently than each of sort of European refineries, will be quite significant. They are, both the old companies in China and the independents are getting licenses to export. Again, I think this supports some of the recovery from the MR side as well. So I think that's not a game changer per se, but it is something new. And then the regional game changer, of course, is the Middle East Gulf with the massive refinery development there, and the increase into higher value exports of the products in the Middle East will be significant, and that's going to go largely long haul east or long haul Europe and west as well. So.
And what we forget, that every day that comes by, standards of living are improving, and refining, which is not one of the cleanest industries, will be shutting down as the standards are improving. So today we see Australia is totally dependent, and we see Japan consolidating. I think that this is going to be a big factor. Refining will be concentrated in few places, and consumption will be everywhere in the world. And this is the main driver of the product business.
All right. Well, we are out of time, and you guys missed your chance to ask questions, so sorry about that. But thank you very much, panelists.
Thank you.
Good to see you.
Marco, good to see you.